Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. For those of you who it's your first time here, well, all we do here is talk about all things market profile. We also talk about a ton of other stuff, but largely stuff that will help you in your journey as a trader. So if it's your first time here, stick around and see what value you get. Today, we are going to talk about Forex trading strategies. Now, I know you guys love Forex, right? Obviously, I cover a lot of other asset classes. As you guys know, I sell option premium and I'm also a huge equity trader. That said, I cut my teeth in the Forex market, like most people did. However, because of my background, you know, I have a institutional background, I also have a retail investing background. So I'm familiar with both sides of the fence, but for me, my primary focus tends to be a lot to do with the equity market. But because I cut my teeth in Forex, what I do happen to know is all the good practices. Now, it really rubs me up the wrong way when you see like a ton of YouTube videos talking about this strategy, that strategy, this strategy, and none of this is grounded in any kind of verifiable information. Like, it's all just hearsay, whatever. So what I'm going to do here today is I'm going to show you the best, right? And when I say the best, right, I'm bearing in mind, right, the space I'm coming from, right? I used to be an institutional trader and I understand, and I absolutely understand what it takes to be a good FX trader. And I also have seen people who are amazing. They're absolutely amazing FX traders. And I've also seen people who are absolutely terrible FX traders. And what I can certainly say is that looking at 90% of the YouTube videos, most of these guys are absolutely terrible Forex traders.
Friends, don't lie.
And I'm saying this because the evidence is there. A lot of you guys probably already know this, but you're following some of these guys. You got to ask yourself, what benefit have you got? If you check out my free Discord community, most of the stuff I'm teaching you here, I'm not charging you anything for. It's absolutely free. You can look through a ton of my videos. I don't hold anything back. I teach you everything I know because I think it's important that we get back to basics, right? We start to first help each other to get where we want to get. Regardless of your size as a trader, there are a lot of amazing traders out there who are doing incredible work in terms of helping people to get where they need to be. So if you're that kind of a person who has been struggling watching some of these influencers right here on YouTube, then you're in the right place, because the one thing that I'm not is an influencer. And as you can see, this is a faceless YouTube channel.
No more tricks. No more lies. Only truth.
That's why I don't go down that route. I'm not going to be a Forex influencer, because the moment you become an influencer, you start to become a slave to the YouTube algorithm, right? You start to produce content that is not helpful. It's not going to benefit anyone, but what it will do for you is get clicks, right? And it will get views. If you look at my channel, a small YouTube channel, barely get any views around here. It's because what I'm teaching is not what YouTube is pushing out there, because it's not what the influencers are teaching. And for those of you who are following those influencers, well, you don't need me to tell you that things are quite the challenge. Now, for those guys who've been following me here for a number of years, they can tell you that they're getting some good value.
Which means a profit so far this year of 1,800 billion. Splendid!
So if you're looking for good value, then stick around. Right, so let's reverse, right? So let's talk about the best Forex trading strategy. So strategy number one, right? So this is, I suppose, this is one of the most important that you probably have to get your head around, and that is what I would just simplify as opening ranges, right? So I'm going to use market profile. So if you're looking at my chart, you are probably looking at the market profile chart. So time price opportunity chart is what we call it, TPO. Now, if you haven't seen a TPO chart before, this is what it looks like. This is my own personal TPO that I got coded from MetaTrader 4. I don't have it for MT5. Again, there are more advanced versions out there, but this for me was the cleanest. I was trying to get the look and the feel that I got with CQG. So for those of you who are aware of CQG's platform, it's widely used in the institutional space. This is similar to what its TPO looks like. It's all just white background, black, very clean. So I was trying to achieve this with my own, but at the same time, I wanted to be able to customize it as and when I need. And so a lot of the features inside of this are customizable, but it runs independently of the MetaTrader 4 scaling, right? So by that I mean it runs independently of the scale here. So what you can see is, you can see that TPO price ticking, and it's registering those TPOs. And if I were to click on any one of these, I'll be able to put the chart in the background as well. So it is super, super cool. So, and I can sort of condense it a little bit. If I want to, I can expand it out a little bit if I want to see the letters a little bit less condensed, right? So I can do a lot of stuff on chart, which is great. So that was the feel that I was going for. I wanted a really clean look because I didn't want my charts to be gamified, right? These days you look at a basic candlestick chart, it's all gamification, right? That's why people are consistently having anxiety, dopamine rushes, losing money in the process. It's all because everything's gamified, right? So that's one of the things that I wanted to take away when I did my own TPO chart. So thankfully I've got that here. Now it is generally not available, but if you're interested, then feel free to reach out to me in my free Discord community, and then we can have a chat about if you want it. But bearing in mind, there are so many other solutions out there. So there's Sierra Charts, like I mentioned, CQG, there's Window Trader. None of these are cheap options, right? Professionals use this stuff, so as you can imagine, no one is going to give you this for free. However, there are a lot of options out there, so you can always explore those. But I'm going to do this particular lesson example using my TPO chart. So back to the conversation of opening ranges. That's strategy number one. Now, if you don't know what an opening range is, it is just the first hour of trading within a given trading session. So let's say, for example, the first hour of trading in the NASDAQ. So the NASDAQ open, the first hour is the first hour's opening range. There are 1 minute opening ranges, 5 minute opening ranges, and you'll hear a lot of traders talk about opening ranges. Now for me, again, if you're in the futures market, or 24-hour symmetrical market like the Forex market, then the opening, it's a 24-hour market, so I tend to look at the opening ranges session to session, right? So for example, I have a session here which is the Asia Open, right? So I'm already marked that off, and you can see, if you're looking very closely to my TPO chart, you can see that it says midnight right here, right? 0 hours in Europe, and that's 10 p.m. in London. But that's for me the first hour of trading, right? That's the opening range. This is a daily profile, so it's reflecting. So you can even zoom in. I don't like to do this often because it just makes everything look a bit big and jumbled up, but just so that you guys can see it a little bit clearer, right? I've zoomed in a little bit, so you can see that's the first hour of trading. That's the opening range, right, for Asia. Now the most important opening range for me are two opening ranges. You got the first, which is the 8 a.m. London Open, right? So that's the opening range. So K period, high to low, is the opening range. Now traders would either trade a break, so it's called an opening range break, and by that we mean you trade a break, so the market trades a print below the K period print. You want to set limit orders to get filled on a sell limit to go down, right? Why do we set limit orders, right? We're adding liquidity into the market, into the central order book, but we're also allowing ourselves to get a better fill. Right, so the price does one tick below the L period, wait for a tick back up into K, and then get filled, right? So that will be a short position. So the opening range break, so let's make this clearer. So we got the low, K period low, K period high, and L period breaks, we go short, right? So it's an automatic thing. You get a break of the K period low, you go short. You get a break of the K period high, you go long. So your risk is always the opening range. That's lesson number one, the opening range. It is the most important strategy, and what you can always do, and what I love about the opening ranges, is that you can backtest how successful you would have been trading the opening ranges. Now, from experience, I can tell you that you're going to have roughly about maybe 60% accuracy. I think, you know, that's for my own individual backtests of the opening range. I can tell you it's about a 60% accuracy, right? In terms of how many times your trade's going to be successful breaking the opening range. Now, note, I'm merely talking about probability here. I'm not talking about the risk reward elements of it. Now, how far the trade's going to go. But typically, when we measure the potential of a trade, we want to look at it based on how many times we trade the opening range. So essentially, think of the opening range as an initial balance, right? What's the equal distance of K period? How much of it can we go? So how many times K period? So let's say K period is 18 ticks. If we go 18 ticks, that's 1-to-1, right? So that's 1 times the opening range. If we go 36 ticks, that's 2 times the opening range. Now, the tighter this range is, naturally you're going to get more extension. So that's another way we can start to tell how far the market will travel in the future, is how tight the opening range is for that given session. Now, traditionally, people in markets that open or close, they would just take the first hour of trading, which, let's say the soybean market, for example, which opens at a specific time in Chicago. Once it opens, you get the opening range. That could be a 30-minute opening range, it could be a 5-minute opening range, but the first couple of minutes pretty much gives you the opening range. So that's one way, that's one Forex strategy that you can use that's going to give you a certain degree of edge, right? It's not that other people don't trade the opening range. You know, the opening ranges, for some people who don't know about it, fair enough, but a lot of people who've been in the trading business for a long time will tell you this is a successful strategy and you can consistently employ that, providing you use it with other benchmarks as well. If you want to kind of get an idea of, you know, let's say you want to give it a bit more edge, right? You want to make sure that you refine it a bit more, and the way to do that is to look at some of the other elements of the profile, which we're not going to talk about now. We'll do that on a separate video. I've got tons of video on market profiles, so nothing you're missing out on. So opening range is one. Now, if we look back, we can see quite similarly, example this day, 8 AM, opening range. We had a failed break, what we call an opening range failed break, and then we traded below period and then overextended. So the point, right, what makes this strategy good, right? So before I labor on, I think you guys get the point. But what makes it good is the fact that you can afford to lay your risk on the opening range, right? So the opening range becomes your risk. You can afford to put that risk, and it's fixed and defined based on the range. So let's say, for example, you wake up on a specific day and the range of the asset is too big, right? You can decide that I'm not going to trade that day because the opening range is too large and, you know, that's just going to skew my risk. Or you could fade the range, right? So let's say the market breaks to the upside, you don't go with the long position, you wait for the break below, which in a way is you're kind of catching the stops that are below the opening range if you're going long, or you're catching the stops that are above the opening range if you're going short, right? So that's one way to trade the opening range. So that's some of the tactics that you can bring into it that I know, of course, like I said, you will not hear any influencer talking about this. I can guarantee it, right? It's either they don't know or they just don't want to share that with you. Because then you won't need them anymore. Basically, you start to hit numbers, right? And that's one strategy. So that's a good habit Forex strategy because it has a couple of things in here. One, it allows you to define your risk properly. Secondly, it allows you to have the ability to trade in the most liquid session and attack the trade. Now I'm looking at cable here, right? So I know this works for cable. I was a huge cable trader when I did a lot of Forex trading, and I pretty much only traded cable. For those guys who've known me for a long time, going way back to 2012 to 2014 at the height of my career in the business, would tell you that I was a big cable trader. So that's one, the opening range. Now the second strategy, right, so let me zoom out, right, that every trader should know is what we call the value trade, right? What is the value trade? Now the value trade is what in the industry is referred to as a 70% probability trade, right? So effectively what that means is if an asset trades into value, there is a high probability that it's going to trade the entire value area, right? So that's the second strategy that Forex traders should know, is what we call the value trade. Now some people will teach the value trade in the sense that, so let's take this profile. So let's expand this out a little bit, right? So right here we got profile number 1, we got profile number 2. What we can easily do is we can split profile number 2, right? Split it there, and then we can see the liquid session, which is London, 7 a.m, 8 a.m, right? So for me, of course, in London it's 8 a.m, in Europe it's 10. This TPO is coded to the Cypriot time because the broker and platform that I'm using is a Cypriot-based broker platform, which allows me to run my TPO on MetaTrader 4. Right, so the times are all coded to that. Those of you guys who've traded for a long time probably already know this, so I probably don't need to go into immense detail. Right, but we have a liquid session here at 10 a.m. So first and foremost, we see K period, we see the opening range, right? That's the 8 a.m. opening range, London opening range. We tick above L period, we get that fill, and then we go through value. So this is, we traded down, we did what we call excess, or again, we traded liquidity, right? We reversed, we came back into the value area, and then we traded to the upside. This was a 70% probability trade on this day because we can see in a liquid session, which is the London Open, we can clearly see the opening range. We could predict that we're going to get a 70% chance that the market was going to trade between value high and value low of the prior day, right? So you can see that value high and you can see that value low. We traded all the way into offers. Now we're going to talk about this. So this brings me to the third most important strategy as a Forex trader, right? And that is, right, that is the ability to see bids and offers. And we can only see this on a time price opportunity chart. Example. So we're talking about that in my previous video. If you haven't seen that, please go and watch that video before you even continue with this one, because it will give you a lot of insights. So the first thing we had was we traded into a low excess, right? So that was the liquidity low. So we traded the liquidity and then we reversed and then we went up. The offer stack, as we can see that here, we had several offer stacks, but the highest offer stack was the one that was trading up here. And you can see I used the 2 red lines to denote that we've had a lot of trouble breaking that offer stack. When we trade into offer stacks, let's split this profile here, we get a reaction. That is a sign that there are a lot of passive orders in the central order book, and we call those offers, right? So those are offers to buy. So when we trade in and we try and lift those offers and there's not enough buyers to take the orders that are sitting on that huge offer stack, what then happens is the market finds that there's too much supply, right? And if there's too much supply, then that supply is going to put pressure on the market to the downside, right? Because we've gone up, we've tried to lift all the offers we could, and there's still some there. So it's acting like a lead weight. So it pushes the market back out, right? So in the ability to see offer stacks, i.e. where passive offers are likely to lie, and mark those areas and look for a reaction, is normally a great low risk, high reward strategy. It's a huge one because you don't have to do a lot of heavy lifting. You can do a lot of swing trades. using that particular idea, right? You would also see the market dynamically move out of offers. So another example is this day here. We settled, the market opened, and then we traded out at the Asia session of the offers, right? Of course, the moment we came into Europe, the market was a little bit extended at this point, and then you can clearly see that we went into a bit of a volatility spree. Again, this is something I say to traders is trade early liquid sessions, and if the market is already overextended, potentially expect a reversal in the following session. So if in the London session the market's overextended, then expect in the US session you're going to get a reversal because the market is trading at a discount. And especially if we're trading close to the liquidity area, what do I always say? Wait for the liquidity hunt. Wait for the liquidity hunt, right? Once you see that, it becomes a good time to react, and then you can get a high probability trade. So you can start to explore ideas like this again. So again, we split this. We can see that we traded liquidity on the P period. Again, major session, 7 a.m. we were tearing into value. It's a 70% value trade to the upside. Of course, if you're waiting for K period, the market was a little bit extended out of the 7 a.m, which tells you that a lot of traders came in early, right? So it's kind of like a pre-market trade. They came in, traded at 7, and by 8, the market is overextended, right? But this is a typical example of liquidity getting taken out early, 7 a.m. And then as we move into, 6 a.m. And as we move into the 7 a.m. session, we get a big vault to the upside. Again, if you see that, you can capitalize on that as a value trade. Again, you can see there's absolutely a fine profile. There's hardly any offer stacks. The nearest offer stack is up here. Now, the chances you will get a response from an offer stack that you're running into is quite high. So again, a good example is how we traded into that. On this day, into a major US session, we hit the offer stack and we backed straight out. If I split this profile, you can see the impact of hitting that offer stack. It closed the market lower on the day, and then we came into Asia, very illiquid session, traded up to value high, right? So that became a value trade in Asia, and then we opened K period. That should immediately tell you this market's going to go short. What did I say? If the market is overextended, in this case over multiple days, into an offer stack, into a value high, you should start anticipating that we're gonna tumble downwards. So the third strategy is understanding offer stacks, right? So again, that's a really good Forex strategy for Forex traders, right? And if you're not looking at this stuff, guys, it will explain why you're losing a ton of money.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
Right, you need to understand this. If you don't, then you're in trouble. So now to the final one, right, which I have been hinting to as we've been going through this video. And we're going to talk about that. And again, just talking about offer stack. Look what's going on right now as I'm making this video. We're trading 25.42. We hit into a bid stack, right, which is the opposite of an offer stack. And you can see that it's marked out in this liquidity area. And look what the market is doing right now. Pay attention. You see that? We hit that, came out. And this is a US session. We are trading a major US session. 3 p.m. What happens at 3 p.m.? That's the Chicago Open, right? So that 3 p.m. hour session is a major liquid session, and it's going to have an impact on other assets like the S&P, and all of those are all going to be responding out of this session. So again, understanding this is crucial. So if you've been short all day and you hit a bid stack, you want to take profits immediately. Yes, this market could break the bid stack, but you want to start taking profits because something is going to happen. Again, if you're going to go long this market, wait to see the liquidity hunt. Don't just trade off this bid stack to go long, but you can see that if you were short, it's a good take profit angle, but you do want to see a liquidity hunt. And that's going to bring me to the final Forex strategy, right? This is highly important. Okay, and here we go. So I like this strategy because it is so simple, right? But it's so underrated. What do I mean by that? The strategy I'm talking about is what we would describe as a stop hunt below strong liquidity, right? So essentially all we're doing is we're looking for where the market has hunted stops or has gone after liquidity. A good example, we have the T period low, we trade down on R period, we take out the stops, we settle, becomes a good opportunity for a long trade. We trade above P period, we take out the liquidity, we're coming into a value high, becomes a good trade, as you can see here to the downside. We took out the R period liquidity, again this would have been an early trade, but if your risk was above, you also benefited from the downside movement. We traded below liquidity. In an illiquid session, we don't do anything because this was like 7 o'clock at night. I mean, you shouldn't be trading at 7 o'clock at night in a London or European session. That just makes no sense. Wait, that's not something you should be doing. You should be having fun with your friends, your family. If you have kids, your kids. If you have a wife, your wife. You shouldn't, or your girlfriend. You shouldn't be trading, right, guys? You know, no one is that crazy. You shouldn't be trading. Again, we see a similar example here. I mean, I jumped ahead, but we traded liquidity upside C period, and we backed up in a major US session. Traded the underside liquidity in W. Again, what time is this, guys? It's like 9 o'clock at night. You should not, at 8 o'clock at night, sorry. You should not be trading at 8 p.m.
I think I should get to bed.
Right, so it's an illiquid session. So whilst we might see liquidity hunts in illiquid sessions, those are the ones you don't want to stay away from. So again, you can see in a major session, M period to O period, that's 12 noon pre-market. You can see we traded liquidity in N. We started to take that in O. That becomes a good long trade. We found the bids again, so we reversed in R period, which is the Chicago Open. Again, we hit that and then we travel to the upside. Again, we trade liquidity above, down, illiquid session. Again, what are we looking for? For us to go and take out liquidity and reverse. We haven't yet done that. The nearest liquidity low level is the U period low, and that is what we're going to be paying attention to. So if we can trade on the U period low in a major session, again, we are almost away from all the major sessions because this is that 3 p.m. session, and if we're not yet at the liquidity low, then by the FTSE close, it's likely going to be an overnight trade. So if you don't want to hold the overnight risk into Asia, which is not a recommended thing to do, if you're an intraday trader, of course. Again, if you're swing trading, this is the wrong time frame. But again, even at that, you just don't want to carry that additional overnight risk, especially if you're in the Forex market. So again, you can see we're still trading lower, so there is no trade. People who are trying to rush at this to get short, well, I'm not going to watch this whole market till the end of the day, but I can certainly tune in tomorrow and can see how many people are going to get destroyed. Right, just trying to short this backside of a move, right? You know, you don't want to be doing that, right? You don't want to be doing that. So at the end of the day, just be safe, guys. Stop listening to influencers. They're not going to help you. In any case, I hope you enjoyed the video. To my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?